Welcome to News Beacon, your trusted source for breaking headlines, global insights, and sharp analysis from around the world. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss an update. July 29, 2025, a date that will be remembered for years to come. Wall Street opens to chaos. The energy is frantic, the tension palpable as the opening bell rings out across the New York Stock Exchange. Traders, usually decisive and quick to act, are frozen by disbelief as the Dow plunges hundreds of points at the opening bell. The screens flash red, and the air is thick with uncertainty. U.S. government bonds, the traditional safe haven in times of trouble, are also in freefall, an ominous sign that investors aren't just shifting money but fleeing the U.S. system entirely. The usual rules no longer seem to apply. Most alarming of all, the U.S. dollar is collapsing on global currency markets. The world's reserve currency, once a symbol of stability, is now in retreat. This is the dreaded trifecta: stocks, bonds, and the dollar all crashing together, a rare, devastating signal of lost confidence in America's economic foundation. It's a scenario that financial experts have long warned about, but few believed would ever actually unfold. Analysts scramble for answers, but all eyes turn to the administration's aggressive tariff policies, which have finally pushed global anxiety past the breaking point. The ripple effects are being felt in every corner of the financial world. For decades, the U.S. was the world's financial anchor, a safe harbor in any storm. Investors everywhere trusted in the strength and reliability of American markets. But today, that trust is cracking. The foundation that supported global finance is showing deep fractures. The very policies meant to protect America are now triggering a crisis of faith among the international investors the nation depends on. Confidence, once lost, is hard to regain. The question is no longer just how to stop the bleeding, but what this means for the future. The uncertainty is spreading, and the world is bracing for what comes next. If the world loses confidence in the U.S., the consequences could be catastrophic. Higher borrowing costs, a weaker dollar, and diminished global influence. The ripple effects could reshape economies far beyond America's borders. The synchronized plunge is more than a bad day for markets. It's a warning shot, signaling a potential historic shift in the global economic order. The world is watching, and the sense of urgency is growing by the hour. The U.S. faces a moment of reckoning. The choices made now will echo for generations. The world is watching, and the stakes have never been higher. Every headline, every decision, is being scrutinized by leaders and citizens across the globe. The post-war era's financial order may be ending before our eyes. A new chapter in global finance is beginning, and its outcome is far from certain. At the heart of the turmoil is President Trump's sweeping tariff strategy, a bold move that has sent shockwaves through the global economy. These are taxes on imports, designed to boost American industry and protect domestic jobs from foreign competition. But these tariffs have unleashed unprecedented uncertainty, making it nearly impossible for businesses and investors to plan for the future or make confident decisions. The unpredictability is global. Tariffs target not just rivals like China, but also long-standing allies, straining relationships that have been stable for decades. Suddenly, the U.S. is seen as a volatile, risky bet, and the world is watching with growing concern. Investors, spooked by shifting rules and unpredictable policies, are pulling their money out, seeking safer havens elsewhere. The U.S. runs a massive budget deficit, relying heavily on foreign investors to buy treasury bonds and finance government spending. If those investors lose faith, they'll demand higher interest rates or stop lending altogether, putting the U.S. in a precarious position. Tariffs intended to strengthen America are shaking the very pillars of trust that support its financial dominance and global influence. The risk is real, scaring away the foreign capital that keeps the U.S. economy afloat and stable. Higher borrowing costs could ripple through government, businesses, and families, making it harder for everyone to thrive. The very tools meant to protect American jobs may end up threatening them as uncertainty spreads and growth slows. The world's trust is fragile, and it's slipping away, leaving the future of the global economy hanging in the balance. For 70 years, the U.S. has been the world's financial sanctuary, its dollar the global reserve currency. In times of crisis, money flowed into U.S. assets, keeping the dollar strong and borrowing costs low. This exorbitant privilege let America fund its ambitions cheaply and project power worldwide. But now, unpredictable trade and foreign policies are eroding that trust. Tariffs and financial threats, even against allies, signal a shift from stability to volatility. Allies who once saw the US as a reliable partner are rethinking their dependence. The foundation of trust is cracking, like a building with hidden structural damage. As confidence wanes, foreign investors hesitate to buy US bonds, and central banks look to diversify away from the dollar. The safe haven status that underpinned American power is at risk. The world is quietly preparing for a future where the US is no longer the anchor. America's financial dominance is no longer guaranteed. The cracks are spreading, the world is watching and adjusting. As trust in the US financial system erodes, global rivals are moving fast to reshape the rules of the game. China, America's top economic competitor, is now aggressively pushing for oil to be traded in yuan, not just dollars, signaling a bold challenge to the status quo. This is a seismic shift, because for 50 years, oil has been priced almost exclusively in dollars, a system known as the petrodollar. This arrangement has long underpinned America's global financial dominance. Now China has struck a major deal with a leading Middle Eastern oil producer to buy crude in yuan, following similar pacts with Russia and other energy exporters. These deals are setting a new precedent in global trade. By building a yuan-based oil market, China is creating an alternative financial highway, one that's insulated from US influence and less vulnerable to American sanctions or policy shifts. If more countries follow China's lead, global demand for dollars will fall, weakening its value and eroding America's leverage over the world economy. The petrodollar system forced nations to hold vast reserves of dollars just to buy energy. If that ends, so does a key pillar of US power and influence. Foreign central banks could start dumping dollars and US bonds, driving up American interest rates and borrowing costs, and potentially triggering financial instability at home. China and Russia have long sought to escape US financial dominance, working together to build alternatives to the dollar-based system. Now they're building a system where Washington's sanctions and pressure matter less, giving themselves and their partners more freedom in global trade. The implications for the US are profound: less demand for dollars, higher costs, and a diminished role in shaping global finance and policy. The world is hedging its bets, diversifying away from the dollar and exploring new financial alliances. The petrodollar era may be ending, ushering in a new chapter in the world's financial story. America's rivals are seizing the moment, determined to shape the future of global finance on their own terms. The financial landscape is shifting rapidly, and the balance of power is in flux. The US must adapt to this new reality, or risk being left behind as the world moves on. The global drama hits home in the form of higher prices for everyday Americans. Tariffs make imports more expensive, and companies pass those costs to consumers. Inflation rises, groceries, electronics, cars, and clothing all cost more. American businesses reliant on imported parts face higher production costs and must raise prices or cut jobs. A weakening dollar makes imports pricier still, and foreign travel more costly. If foreign investors stop buying US bonds, interest rates rise, meaning higher costs for mortgages, car loans, and credit cards. The squeeze on household budgets is real and immediate. The intended protection of American jobs may backfire, leading to layoffs and business closures. The pain is felt on Main Street, not just Wall Street. The economic storm is personal. Tariffs are straining America's closest alliances: Canada, Germany, Japan, and more. Treating allies as adversaries pushes them to seek new trade partners and question US leadership. This creates a vacuum, and rivals like China and Russia are eager to fill it. China's Belt and Road Initiative offers alternatives, expanding Beijing's influence as US relationships fray. The unity that once defined the West is fracturing, making it easier for rivals to push de-dollarization. America risks isolation with fewer friends and more emboldened competitors. The world is realigning, and US power is at stake. The US dollar is in freefall, down over 10% in just 6 months, its worst drop in half a century. Investors are sending a clear message: the dollar is no longer a safe bet. The plunge is fueled by fears over tariffs, political unpredictability, and ballooning debt. As the dollar falls, the euro and pound surge, attracting capital fleeing US markets. The Federal Reserve faces a dilemma: cut rates to help the economy and risk a weaker dollar, or raise rates and risk recession. The dollar's weakness signals a fundamental shift in global confidence. For decades, its strength was a symbol of American power. Now, that symbol is fading. The world is watching to see if this is a blip or a new era. In uncertain times, investors seek safety. For decades, that meant the US dollar and treasury bonds. Now with the dollar volatile, money is fleeing to gold, its price surging to multi-year highs. Gold's rally is a classic sign of deep economic anxiety and distrust in government-issued money. Investors are betting that gold is safer than a currency managed by unpredictable policies. Capital is also flowing into the euro and even the British pound. As Europe looks more stable than the US, investors are diversifying globally, searching for stability wherever they can find it. The old map, with the US at the center, is being redrawn. Aggressive tariffs, soaring debt, and political chaos have tarnished American assets. As money finds new homes in gold and foreign currencies, the trust that underpinned US financial leadership is eroding. The global financial landscape is shifting. The US is no longer the undisputed sanctuary for capital. Investors are voting with their wallets. The world's safe haven is moving elsewhere. The future of the US dollar and America's global role has never looked more uncertain. The Wall Street crisis may be just the first tremor of a much larger shift. The core issue, a breakdown of trust. America First policies may leave America standing alone. A permanently weaker dollar means persistent inflation and higher borrowing costs, threatening public services and global influence. China's push for yuan-based oil trade signals a world building alternatives to US dominance. Once new systems are in place, they'll be hard to reverse. The global economy is adapting to a new reality, one where the US is no longer the only game in town. Is this a temporary crisis or the end of the dollar's reign? The answer will shape America's future and the world's for decades. The horizon is uncertain, and the world is watching.